Gulf Oil reported a 12% increase in its profit at about 56 crores, and the EBITDA margins came in at 18.4% versus 15.8% in the same quarter last year. So the company has been able to record this performance despite the downturn in the auto segment. So to talk to us about the factors that went behind the earnings, Mr. Manish Gangwal, the CFO of the company, is here with us. Mr. Gangwal, so could you talk to us about the factors that contributed to your earnings this time around, and what kind of volume growth did you see during the quarter?
Yeah, good morning. And yes, we had a good quarter considering the overall economic situation, and considering that there is an auto slowdown with lubricant industry, as per our estimate, degrowing by maybe 5%. We have grown our core volumes, excluding the factory fill business, by 8%. And the YTD 9-month, we continue to grow our core volumes double digit if we exclude the factory fill volume. We all know that the factory fill volumes for us and the industry have degrown 60-70% because of production cuts by OEM. But if we remove that segment, our other businesses have delivered a double-digit growth on a 9-month basis, and in this quarter also nearly 8%. So it's a robust growth and completely outperforming the industry by at least 3 times. And at the same time, the input costs have been favorable, so the gross margin expansion has been significant, and that helped us to deliver a very good EBITDA of 18.4% for the quarter, which is the highest EBITDA in last several quarters we have seen. So overall a good positive set of feel we are having internally.
Okay, Mr. Gangwal, so one of the factors helping your margins is a changing product mix. So can you tell us how the product mix currently looks like, and going forward, what is the company gearing towards?
Yes, so product mix plays an important role, and we have been trying to focus on personal mobility. We all know that the diesel engine oil market, which is a large part of the market, has been sort of subdued. But our growth in personal mobility, especially the passenger car segment, continues to be very robust and double-digit, more than clearly outperforming the industry there again. So all the factors in terms of product mix. Also, we have initiated rural reach in a very organized way, and our Gulf Rural Stockist program. Today, that number of Gulf Rural Stockists has crossed 1,000 across India, and that is helping us to reach deep rural in an organized way and get the market share from rural as well. So all these initiatives are panning out well for us in terms of continuing the double-digit volume growth. And if the industry picks up again and the factory fill volumes start, post BS6, the factory fill volumes again start picking up, the next year's overall should look very good.
So, Mr. Gangwal, so how soon do you anticipate that pickup to come in? Because when we speak to various auto players, analysts, any other stakeholders, the sense that I get is that the pickup in the auto industry is still maybe a few months away. So, going forward, let's say in FY21, what kind of volumes are you targeting, especially in the factory fill segment?
You see, we are also estimating that from the quarter 2, once the BS6 is established from April 1st, and there is a quarter of transition time, from quarter 2 onwards, the factory fill volume should pick up. And in any case, we have seen a 70% degrowth in factory fill volumes, and we believe they are anyway near the bottom. And from here, we can only look upwards next year on factory fill volumes. And other core businesses, as I mentioned, have already grown double digit and continue to grow there. And in addition, we keep trying for new OEMs, and we have announced a tie-up with Piaggio starting January this year, and that itself should give us additional 3 to 4% volumes next year, and in terms of our growth. So overall, next year also we are quite confident of a double-digit volume growth on a totality basis.
Mr. Gangwal, so any new segments that you're looking to enter into? Also, you have plans to expand the battery segment. So, what would be the guidance on that front? Or any update, because you had plans to set up a greenfield plant?
Yes, so we are focusing on, continuously focusing on multiple products. And to give you an example, this quarter the agricultural segment has been very good for us. The lubricant which are going for tractor market has seen a very robust growth, where we had low market share earlier. So we are picking up our segments. And talking about battery, we continue to grow our volumes clearly 20% plus every year. And once we reach a size and scale, we are looking at sourcing options, which includes local sourcing or even other sources overseas. Both options are open, and we are continuously in discussion on localizing the production as well.
Okay, Mr. Gangwal, so you spoke about your rural reach. So going forward, what are your plans as far as expanding that or increasing that distribution reach? Also, from an investor point of view, help me understand, because your retail touch points are something like 73,000 versus 150,000 for that of Castrol, but the volumes that you've been clocking in, let's say, last 3 to 4 years have been higher. So what is your distribution strategy that is helping you gather these volumes?
So our distribution numbers have always been increasing ahead of our volume growth. So if we have been growing our volumes at 12% CAGR over the last 7, 8 years, 10 years, our distribution numbers have grown even 2-3% higher than that. And as you rightly mentioned, today we are close to 75,000 retail touchpoints, which continues to grow. Also, these rural initiative which I was talking about, each rural stockist, Gulf rural stockist, caters in turn to 15-20 rural outlets. So if we add up that, we get additional 15,000 touch points. And in addition, we have our Gulf car stop, Gulf bike stop initiatives, which are giving us further new channels of distribution. We are also going in an organized way to the new age distribution channels, also online, and other initiatives are in progress. So there is a multiple action on distribution front, which we will always be growing ahead of our volume growth. So the distribution numbers will be always growing higher than the volume growth.
Okay, so just one last question. Leave us with an overall guidance for FY21. What kind of PAT growth, volume growth, margin figures are you targeting going forward?
So we always try to get 3 to 4x the market growth rate. Currently the market has been -5%, but we are hopeful that once BS6 is established, the market will come back to positive territory. And our double-digit volume growth aspiration continues next year. We have, as I mentioned, already delivered a double-digit volume growth in our core volumes, even in these tough times in the current year. So there is no reason why we should not grow double-digit next year in terms of volume.
Mr. Gangwal, thank you so much for joining us, and all the best for quarters to come.
Thank you.